Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time this afternoon.
Good afternoon.
Well, if we could start with interest rates. The Fed having raised rates on Wednesday, now the European Central Bank following suit, but with a smaller increase as well this time. Switzerland also raising 50 basis points. The ECB nonetheless saying it sees significant further rate hikes ahead. What do you make of these moves being made by central banks right now around the world?
Yes, as you said, the ECB raised interest rate by 50 basis points during the last monetary policy meeting of 2022. This is making a fourth rate increase following two consecutive 75 basis point hike. That takes the deposit facility to 2% and the refinancing rate to 2.5%. And the marginal lending rate to 2.75%, a level that has not seen in the 14 years of history. Policymakers also said the rates are expected to rise further due to substantial upward revision to the inflationary outlook. If you look at the inflationary forecast, it has been revised higher, with average inflation reaching 8.4% in 2022 before decelerating to 6.3% in 2023. Clearly, inflation needs to come down to average of 3.4 to 2.3% in 2024 and 2025. In order to achieve that, obviously, continuation of the rate hike is expected. If you look at the GDP front, Euro area economy has contracted in the current quarter, and the next quarter is expected because of the energy crisis. Clearly, this is following the suit of the Fed of U.S., where they have raised interest rate by 50 basis points to 4.25 to 4.5%, slowing down to from the giant step of 75 basis points in the previous hike. On the inflation pressure side in U.S., also it remains to be still very high at 7.1%. But most likely over the next 1 year, it is expected to come down to below 3% territories. Clearly, in terms of the interest rate hike, we're not going to see interest rate hike stopping, but in terms of the speed of the rise was stabilized, maybe gradually raising around 0.25% in a consecutive next 2 or 3 meetings. After that, maybe the rate hike will be stopped. And after that, depending on the economic recovery side or economic growth rate, there might be a possibility of rate decline. But for the time being, over the next 12 months, a lot of the central banks are talking about raising interest rate further and keeping it high level.
Well, looking at stocks now, Wall Street was significantly lower overnight. In fact, it was the worst session for the Dow in weeks. The Nasdaq off by more than 2.3%. It seems looking at these headwinds for the American economy. What's the story in the global equity markets?
Yes, the Dow closed 760 points lower. S&P 500 slipped 2.5%. Nasdaq underperformed and declined by 3.2%. Clearly, this is due to the uncertainty of rate hike, as well as the higher than expected rate hike, and concern about the economic slowdown. If you look at the inflation pressure, it did come down quite significantly to 7.1% versus projected of 7.3%. But nevertheless, the Fed chairman as well as the Fed officials are saying that until that inflation goes down to below 3% territories, they're not going to touch the interest rate to be lower. They will continue to keep it higher, probably well above 5%. That caused the uncertainty about the overall market condition. If interest rate remains well above 5% for a 12-month period, then that will cause a significant slowdown of economic growth rate, maybe even to the economic recession. Chairman Powell said that economic recession might be avoided, but nevertheless, it is a big major concern. If economic recession happens, then market is not going to be in good positions to rise. Of course, we don't think that economic recession will happen, but nevertheless, in terms of the uncertainty, it still remains. So the market volatility will continue to remain over the next 3 to 6 months or so.
Right, and Korean stocks were down today too, but not by nearly as much. Chipmaker SK Hynix hitting a new 52-week low. STX Heavy Industries up more than 20% with news about an M&A. Not too much volume today, though. Tell us about the domestic market, Mr. Yu.
Yes, if you look at the currency, the Korean won depreciated sharply day before, but today has appreciated. Now it is at 1307. And this kind of appreciation is happening because foreign investors were coming back to the equity market, net buying about 290 billion of KOSPI and also buying about 525 billion won worth of futures, whereas the institutional investors were major sellers. If you look at the seasonality factors, the unemployment ratios, it has increased to 2.9%, but nevertheless, it is a reasonably good number. But of course, we are concerned about the economic slowdown in the global scale and continuation of the trade deficit. However, though, if the oil price remains at where it is and the economic recession doesn't happen, then we think that the deficit number will be reduced and Korean won will be in a good positions to further appreciate in the future, given the fact that the debt level of the government is very low. Of course, a lot of people are concerned about the retail sector's the debt size, but if the interest rate remains at 3.5%, we think that the retailers are not in a position to be defaulting in the future. So therefore, the domestic consumption level should be also fairly stable. Overall, we think that the Korea is in a good position to outperform in terms of the equity market, given the fact that it has underperformed the market over the last year and a half.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights. Have a great weekend.
Thank you very much. Have a good weekend.